welcome. You're watching Talking Point, and joining us today is a very special guest, Herald Linde, Head of Asia Equity Strategy at HSBC. Herald, thank you very much. It's always great talking to you, and it doesn't get better. The start of a brand new month, a month ahead of elections locally, lots of global and local factors to talk about. But I'll start with the most important one this week, and that is the FOMC meet. Bets are on whether or not there will be a rate cut at all in F5 in this calendar year. You want to tell me what the possibility of a no-Fed rate cut in the current calendar year, considering the kind of economic data that we've been seeing coming out of the US?
Yeah, well, good to talk to you again, Samina. The Fed is extremely important for Asian equities. And you're right. We started this year with the market saying, hey, maybe it could be as many as 5. Some banks were even talking about 7 rate cuts this year. That's really being pushed out of the window. And now some people are talking about maybe rate hikes even this year. Now, I think that might be a bit too early to judge it. But clearly, some of the inflation numbers have moved a bit in the opposite direction than in the beginning of the year. And it looks like we might not even get rate cuts this year. But for the moment, our base case is still that there will be rate cuts coming through, but clearly there's risks to that particular view unfolding, and the market is repricing that.
And Herald, interestingly, in the month of April, we've seen FPIs actually sell out of India for the very first time in the year so far. And this is not just equities, it's debt as well. Do you feel like rising bond yields could mean markets globally and India in specific could see outflows from the US investors?
Yeah, well, I think there's 2 things going on. It's something on China and what happens globally. So globally, yeah, interest rates and bond yields in the US have gone up. So it makes a little bit more sense to put money into the US market again. I'm really talking about US money markets. They're putting in deposits because there you get 4.5% or maybe 5% on certain deposits again. So I think we've seen money move a little bit out of equities in general, all around the world, and India is no exception. So I'm not overly worried about that. That's, I think, sort of a near-term sort of consideration for India.
And let's talk about China, because I know you've been tracking that very closely. And the last time we spoke, you were constructive on China, but I believe you are even more constructive on China today. The yen is at a record low. US bond yields are rising. India may or may not be seeing FPIs come in lock, stock, and barrel, and that could have to do with a local factor such as the elections. Where does China stand, and how much of China's potential inflow could eat into India's pie?
Well, before China, very quickly India, because we do really like India, but it's just a market that's performed so well. It's rather expensive, so we say, maybe we should wait until the slightly better time. But it's a market that we effectively still like. China's almost the opposite. China's got an enormous amount of challenges to deal with that are well presented in well, you guys have talked about it as well, property, economic growth, and all these sort of things. But we've seen such a massive sell-off that now China, a lot of people say, hey, maybe it is a bit overdone. And it comes at a time where India is expensive, and you see that there's some strange things going on with the yen. I mean, I'm not quite sure what happened this morning exactly. It looks a little bit odd, some of the movement, but you see that the Japanese stock market is not really responding to that as it did in the past. It's not rallying much higher. So I have the impression that people are reallocating some money from Japan into China, not so much from India really, but from Japan into China. So China, the interest in China is really picking up.
Are you buying more China than India? Or recommending more buying in China than India?
So at the moment, actually, we like both markets, but the way we like them is very different. China, I see, as a market that might do well, and in the near term, it's oversold. It's a sort of a tactical adjustment that we take to China. So for the moment, I think it will probably do a bit better than India. But if you ask me, hey, 12 or 24 months out, which market do I prefer? I would prefer India. So because India is a very different story. That's why I think we should not see these markets as you sell one and go to the other one. These are like apples and oranges. They're really different. And they give you a very different sort of exposure. India gives you a nice sort of long-term growth story, very, very multiple growth drivers, not a lot of risk on growth, but valuations high. And China is the opposite. A lot of risk on growth, but hey, valuations are really low. That's why I think you should probably have both actually in your portfolio at the moment.
They've become mutually exclusive in the recent past.
Yeah, something like that.
And that's interesting, right? Because it was always an India-China play, which has now changed. Let's talk about local factors, because I think back home, the focus largely is on what's happening on the election front. Do you think that the markets, do you think yourself included, is focusing more on policy continuity than actually a general election result?
Yeah, I think what we've seen at the beginning, since the beginning of the year, there's been a lot of elections coming through. Indonesia, Taiwan has had elections. India is now in the midst of it. It seems like the market expectation of continuity has worked in Taiwan, has worked in Indonesia. It seems like it's going to work in India as well. So the market is assuming most likely no real change in the government party. Therefore, continuation of policies. That's considered to be kind of positive at the moment. So it's being brushed aside for the moment that is any particular issue in equities. So most of the conversations we have about India is about valuations, it's about the growth, it's about what do individual companies do, and not so much about, oh, will there be a shift in policies because maybe a new prime minister might come in or something like that.
Herald, and that I need some more perspective on. Valuations of all equity cohorts and almost all sectors appear expensive, even by the most optimistic in long-term investors into India. Maybe the large cap not as expensive as some of those broader market sector themes that we've been seeing. Is there anything that looks compelling to you, keeping valuations in mind at this stage?
Well, with India, the thing is that Indian companies always belong to the most profitable companies on planet Earth. So you have companies in India that generate enormous amounts of profits, don't have to invest a lot. It's a textbook sort of companies that you want to have. And that explains partially the high valuations. So one thing we just have to accept is it's like, I don't know, it's like maybe a handbag. You have cheap handbags and you get expensive handbags, but you like the expensive one because you get better quality. And so it is with Indian companies as well. So we just have to pay for that. Irrespective of that, it doesn't mean that it's at the moment really expensive. But if you dive a little bit deeper in the market, and you guys have talked about this as well, it's the small and mid caps that really rally. So in the large cap space, there is better value. So in banks and selected consumer names, I think there is still reasonable value to be found, but you have to be much more selective in India. That's absolutely the case at the moment.
And I want to talk about one space that FIs historically have always liked, and that's the banking space in India. Do you see a further drop in bank deposits, considering the increasing flow of money towards capital markets, equities, mutual funds, to list them all? And what does that mean in terms of outlook for Indian banks and simultaneously for non-banking stocks? So capital market players, the exchanges, the mutual funds, the guys who are betting on private banking. How does that look to you as a whole pack, banking and non-banking?
Yeah. So what I think, what we see in India, we see it in a couple of other countries as well. Indonesia, early signs. Thailand, a little bit. We've seen it in Korea in the past. Is actually really powerful. You have a lot of people that are having savings and they want to reallocate it. Normally they put it into the banking system and the banks would lend it out. But now they're actually putting it into capital markets, in bonds and equities and these sort of things. And that's a rechanneling of savings into investments domestically. That's really powerful. That's really good for an overall economy. So that's good for growth. But yeah, for the banks, that means that maybe they have a little bit less on the deposit side and they need to get the deposit in. They have to raise deposit rates. That's not so good for their margins. But given that the overall growth remains pretty robust, I'm not overly worried about this. What we see in India is really a healthy sort of rechanneling of savings into productive assets at the moment. And that can continue for some time. And we know from other countries can be quite powerful to generate growth.
Herald, I don't know whether this is a theme that you've tracked in India, and it seems like DIs definitely like this sector, and it seems like a lot of it is election play. It's built up underperformance of decades together that's helping the defense sector, to say the least. And some of these defense stocks are trading at very high valuations. Do you have faith on this multi-year defense story that's playing out in India? And if yes, are you betting big on it at this stage?
Well, the defense industry around the world is in a very different place than it was 5 or 10 years ago. We have intensifying rivalry between great powers, and India is one of them, around the world. So we've seen defense stocks move around this from China, Japan to India to Europe, everywhere, to be honest. And this is something that will be probably continue to be parts of our lives. Intensifying rivalry between new countries, not even the right word anymore, right? But countries that become new players on the geopolitical stage. My country, the Netherlands, was a real big player 400 years ago, 300 years ago. We're nowhere now, right? So these things come and go. And that new reality puts a lot of life into new industries, and defense is one of them. But also, for example, the tech industries that supply the chips or the cameras and then all these other things, and the memory and the processing power to defense. So there's a lot of these industries that have structural stories unfold. Now, from here and there, these stocks will move on near-term consideration, but in the longer run, yeah, those are sectors that will continue to see growth, and it's up to us then to figure out how you benefit from that.
Right, just extending that conversation into other sectors and the government's focus, would you bet on riding the CAPEX theme considering the government's increased focus on infrastructure spending, Herald?
Yeah, so I slightly have a different view on that. So I traveled in Tamil Nadu a couple of months ago, and yes, the infrastructure is being built out, but it's still early days. So you go from A to B, and you're a little bit on the highway, then you got to get off the highway through the paddy fields, then you're up a highway again, and then you're down on some dirt roads through the paddy fields, and then there's a bit of highway. So they're building it out, and it's not connected yet, but give it 2-3 years' time, it will be connected. And then the benefits from that are that you have a connection between A and B. So trade between A and B will go up, more transport, there will be hotels, there will be property prices will go up. So very often, I think the way to play these sort of themes is actually buying consumer companies or maybe companies that indirectly benefit from it over the longer run. And be careful with the companies that might have a big order now, but maybe not in 2 years' time. So while the attention very often is then straight on, the construction companies will benefit from this, I like to look at the kind of longer lasting beneficiaries of this. And it could be a hotel, and it could be a company that, convenience stores that just benefit from improved infrastructure around India.
Herald, for India, what do you think the theme is? Over the last decade or so, it's always been about made in India. Suddenly the bias could be changing now to make for India. Where would you, if I had to ask you to put your money on one of these, where would it be? Make for India or make in India?
Well, it looks to me it's a little bit of both, right? And I'm chickening out a little bit here, but India has never been a manufacturing powerhouse as China has been in the past. It was a services powerhouse, right? But not so much a manufacturing. But that seems to be changing, and that lifts the domestic consumer demand. So what we've seen in China is happening in India in that sense as well. So you want to be in both areas. But what I really think will be an exciting industry is not AI or robotics or some of the manufacturing. It's actually because a lot of people, when they have another job and they can make more money, they invest that money. That's what we just spoke about. So you're going to have Indians buying Indian assets. India buys India, if you want to put it like that. It's that rechanneling of savings that's really good for stock market, but also good for wealth management. That's really an interesting sort of long-term growth driver as well. India will get richer and will become a bigger investment source of investments as well. That I think is an interesting growth industry.
Buy more homes, and if yes, then I think real estate also goes on that list, right?
Yeah, for example, real estate could be brokerages, could be wealth managers, and these sort of things. It could also be, for example, maybe over the longer run, it means that interest rates over the longer run can come down. So that's good for bonds. So there's many ways to invest in that particular theme.
Also, premiumization, we heard about that a lot, and we've seen that in a few numbers. Staples in the consumption space haven't seen the sort of traction premiumization or aspirational companies have seen. And a lot of those e-commerce names, right, a Nykaa, a Zomato, I'm calling them aspirational because they have changed the way Indians or India really deals with discretionary spending. Do you feel like that's a theme you'd like over staples? Because there are only that many toothbrushes and toothpaste one can buy.
That's right. But there's still a lot of Indians who would like to buy that. So I think that is happening, but it will happen very differently than, for example, what we've seen in China. In China, a lot of families were really small. You had a one-child policy, right? So you had one child and very often two people in a family that worked. So you have, for one salary, only three people, and actually it's two salaries that very often they brought in. In India, that's not the case. The man works, very often the lady stays a little bit more at home, female labor participation rates are lower, and families and households are bigger. So the scope for discretionary spending will improve in India, so that premiumization will be there, but I think it will be a very slow process in India. And that's good if you're in a business, because that means you get more time to build out your business. So I think the dynamic of that, it will unfold, that premiumization, but very differently than what we've seen in other parts of the world. It will be very uniquely Indian, I suspect. Does that mean you want to move away from staples? I don't really think so. But do you want to? I think the key actually is here, not so much discretionary or staples. The key is distribution. Can you get your product, if the Indians want to buy it, can you get that all across India? And being able to distribute that across all these different parts of India that are so incredibly, this is what India is so interesting, right? So diverse. If you can get that distribution right to reach all these people, that will be the secret source, I would say, to success for Indian corporates.
I want to talk about a sector again that's done positive returns for most part of the last decade, and those are IT stocks. Again, something that a lot of people betting on India have usually liked. But the outlook currently seems rather uninspiring, given the delayed rate cut from the US, political outcomes that the markets worldwide are anticipating, throw in Gen AI, so many moving parts, right? How do you feel about the IT stocks? Do you feel like they could be the dark horses of FI25?
Dark horses, maybe. I mean, there's two things. It's one of India's success stories, the IT companies, right? So it's a fantastic story. And the Indian companies have really moved on from just call centers to becoming global providers of IT service. And some banks have more people working now in India than in their home country. So that's been a real long-term success story, and I don't think that will be derailed soon. In addition to that, it's a sort of US dollar exposure. If the rupee would weaken, you benefit from that as well. So that's one story. Then you have a near-term story, which is, well, most likely with high interest rates, the US is supposed to weaken. And we've been talking about this upcoming recession for some time. We haven't seen it yet, but that could weaken. Europe is weakening. So maybe near-term, the order flow and the demand for that will be curtailed. That's bad, but the longer-term story, the positioning that India has really carved out in this particular sector is not just unique, but it's really remarkable. So is it a sector you want to have long-term exposure to? Yes. But if the US numbers come out and look like GDP is really rolling over and is getting weaker, do you then want to have exposure to it? Maybe not. So it's more of a near-term consideration, I would think about that.
You know, Herald, you indicated a couple of times that Indian markets have always been expensive, but we do look a little more expensive than our historical average. I want to understand from you, what in your opinion is a risk that you're watching out for Indian equity markets? Or put another way, right? What do you think could lead to a correction on Indian equities? Would it be price or time-bound? And the reason I ask you this is because if incremental flows need to start coming in lock, stock, and barrel, we would need a correction either price-wise or time-wise.
Yeah, I think there's a couple of risks that we need to keep a close eye on, but none of them keeps me awake at night, so to say. First of all, you're an importing country. You need to import energy and these sort of things. If oil prices would shoot up, that would not be good for India. And typically, oil prices, if they move towards $100, people don't care about it. They go over $100, whoops, so everybody cares about it. So that's one thing. I think a second risk is that we now see a lot of individual growth drivers, investment flows, consumption flows, and these sort of things. That's good. But if for some reason that would start to fade, some of the growth that has come out of India is because your credit costs have come down. They've cleaned up balance sheets, the banks. Now, that's really good, allows them to expand credit, give out credit, but that will eventually come to a halt, so that's a risk factor as well. So if the earnings growth numbers are going to disappoint, that's a second risk factor that I would be looking at. And then there would be risk that maybe India can't really control. That would be what happens globally with the global macro. If for example, we see a complete reversal in either, say, the US, interest rates in the US go up, and then the bond yields shut up and stock markets go down, that would not be good for any stock market, India included. Or what we just spoke about, that China is suddenly becoming so much stronger that it actually does suck up money, not just from Japan, but from other parts of the region as well. And that would be India. And as I mentioned, I don't think that's a near-term risk, but these are some of the risks that I would be thinking of when it comes to Indian stocks.
Herald, what percentage of your India allocation is still on the sidelines? Do you recommend increasing cash holdings with regard to Indian equity markets? And also, taking profit at higher levels at this stage is what's on your mind?
No, I mean, if I think about cash holdings, I think about what is the direction of US bond yields. And I actually think they're going to come down, so we like equities. So I don't want to have a lot of cash. You want to be in equities. And in that sense, you want to be in Asian equities as well. I think China really has a bit of momentum developing, so I would be looking there. For India, would I put cash on the side? Probably not, to be honest. Would I buy more? Well, we're overweight, so we like that exposure. But I think the momentum in the near term could come from China. So the additional money I have, I would probably, or we see that people putting that into Chinese equities at the moment. But I wouldn't go necessarily into cash. I think it's very dangerous to bet against the Indian equity story if you have such good earnings growth coming through. So we'd like to stay fully invested in that sense.
Right, so stay invested, but it could be a little more stable and slower in terms of growth for FI25.
Yeah.
What sort of a number in terms of growth or returns are you expecting for FI25 for Indian equity markets?
Well, I think consensus is looking for something well over 20%, 24 out of the top of my head. So there's pretty decent growth coming in. That might prove a little bit too much on the high side. I think India might be slowing a little bit from last year, but maybe I'm wrong. But I suspect if we can run something between 15 to 20%, that would already be pretty good. So I'm guessing we're probably ending up in the high teens, but consensus at the moment is looking for a little bit higher numbers. And I hope to be proven wrong in that sense, because I mean, growth is good for equities, and this is why we don't want to be in cash. We want to remain fully invested, because the risk is on the upside in that sense.
I'm so glad you say that, because I mean, it's anyone who's concerned about it being a negative returns year of returns for the markets will take a sigh of breath. Just one quick one, and I want to talk to you about gold, because what's happening in gold is also very interesting. It's very rare that you see risk-on and risk-off assets play out well at the same time. Gold has had a strong run from the start of this year. I know geopolitical stress could be one key driver for gold prices, but how are you approaching gold, and are you looking at gold's rally as a cue to what lies ahead for risk assets in the next couple of months?
No, to be honest, I don't really look at gold in that sense. Yes, I've noticed gold is moving higher. I think there's a variety of factors to it that you already mentioned: geopolitical considerations, maybe bond yields coming off. So therefore, on the margin, why would you keep your money in a deposit? You put it somewhere else. Gold is an alternative. I think from what I understand, there's been good buying in China of gold as well, because if you're Chinese, do you want to buy property? Maybe you're cautious. The stock market has not done very well. So people are looking maybe for something else. Gold demand might have picked up for that particular reason as well. So there's a lot of these moving parts. But if I really think about, hey, what should I do, for example, in Indian equities? Gold is something I look for because India is an importer of gold, but I really look at bond yields. I really look at the growth profile in India. So the stuff that we just spoken about earlier on, the FOMC, the Fed, what are they doing? What is the earnings growth in India? That for me are the real key drivers. And gold is something that I put then on the side. I don't let them determine what I do in equities.
Right, Herald. As always, it's a pleasure having you on the show and talking to you about your perspective on India and the rest of the world. We'll hopefully see you soon again, and have a good week.